There is a persistent, expensive lie keeping thousands of Texans out of the real estate market. The idea that you must stockpile a massive 20% cash down payment before you can even think about buying a home. Believing this keeps people trapped. While you spend years trying to hit an arbitrary savings goal, you are still writing a rent check every month, effectively paying off your landlord's mortgage instead of building your own wealth. But the reality on the ground is different. The Texas Department of Housing and Community Affairs, or TDHCA, was created specifically to bypass this financial barrier for state residents. The TDHCA provides state-backed capital for down payments and closing costs, injecting liquidity directly into your transaction at closing. The state holds the funds to make homeownership possible for you today. Securing that funding requires a precise understanding of how the program is engineered. TDHCA assistance is formally structured into two specialized loan types, forgivable and deferred. The forgivable option is typically a 3-year term. As long as you stay in the home and maintain it as your primary residence for those 36 months, that entire down payment debt hits zero. It is completely wiped clean. The deferred option acts as a 30-year loan with 0% interest. It requires no monthly payments, allowing the assistance to sit in the background without impacting your monthly budget. On the back end, we coordinate this assistance as a piggyback second lien. It is a secondary mortgage that sits directly behind your primary home loan. Leveraging this dual lien approach transforms the financial math of home buying, turning a theoretical savings goal into a structured, immediate opportunity. A common misconception is that these programs are strictly for the lowest income brackets. In reality, the eligibility windows are broader than many buyers assume. Qualification hinges on comparing your total household income against specific federal thresholds. These thresholds scale based on the exact county where you are buying. This is the Program Eligibility Income Grid. To qualify, every source of income for everyone living in the house, from base pay to financial assets to government transfers, must be mathematically documented and verified. The system is rigid. Look at this state portal error message. If the documented household income exceeds the federal limit by even a small margin, it triggers an automatic hard stop denial. Beyond the down payment, the Mortgage Credit Certificate, or MCC, can convert a portion of your annual mortgage interest into a direct dollar-for-dollar federal tax credit, which effectively increases your disposable income. Because a single mathematical oversight can disqualify the entire application, you cannot rely on guesswork. You need precision underwriting from the start to ensure the figures match the state's strict requirements. Securing this capital requires navigating the TDHCA Lender Portal, an operational environment with very specific procedural rules. Timing is the most critical factor. Funds cannot be locked at the beginning of the search. They must be reserved only after underwriting approval, and typically within 15 to 30 days of the actual closing date. At the moment of reservation, we must select the correct program from the single-family series. This involves locking in the specific combination of loan type, like FHA or VA, alongside the exact forgivable or deferred DPA product. Before the loan can fund, we must complete the underwriter certification form. This is a legal verification of the risk assessment and debt-to-income ratios, certifying that your file meets all agency and servicer standards. Even after the paperwork is signed at closing, the compliance work continues. We monitor the portal to clear meticulous post-closing conditions, such as missing affidavits, to ensure the state officially purchases the loan. This labyrinth of portals, timelines, and compliance conditions is exactly why navigating government housing programs requires an elite operational team. The down payment money is real and currently available. However, capturing it requires flawless execution of these technical steps. John McClellan and the team at Supreme Lending act as the operational bridge, handling 100% of the back-end complexity on your behalf. While you focus on finding the right property, we handle the portal reservations, the compliance documentation, and the critical funding deadlines entirely behind the scenes. Stop waiting to hit a savings goal that keeps moving. Stop paying rent. It is time to find out exactly what TDHCA programs you qualify for right now. Reach out to John McClellan at Supreme Lending today, and let's secure the funding to get you into your Texas home.